Well, hello everybody. Welcome to the Strategy Lab video. My name is Alexander Nikitin. I'm a professional trader and a developer of pattern search software. If you guys are new, what I do in these videos, I explain you how to do the backtest of your strategy, whatever it is, it doesn't matter. In my case, I'm using the advanced patterns and harmonic patterns and something related, so I do the backtest of that. And I show you how can you calculate your maximal drawdowns, how can you calculate the expectancy of your strategy, your average win, average loss, and this all will be done programmatically using the Excel spreadsheet. I also show you the formulas you can apply to that. What are the benefits of that when you know what is the expectancy of your strategy? Of course, you have a confidence that your strategy is working, and in case you have some temporal drawdowns, like this, yes, you simply continue trading your strategy because you know that those drawdowns will be sooner or later recovered. And this is the problem, that majority of traders just quit the strategy and they take another strategy as soon as they have a drawdown. Okay, so I want you to do the backtest on your own to acquire that experience, to acquire that confidence. Okay, let's talk about the tips that I discovered, and I will draw some kind of Gartley pattern. It doesn't matter, it is a schematic pattern. So the overall structure of a bullish pattern looks like letter M, and the bearish pattern looks like letter W. This is the major structure, how it should look like. But I also discovered that this pattern should be placed in a proper context. Okay, if you find the pattern in this context, when you have this and then you have that, it won't work the way you expect that to work. In the majority of cases, these patterns fails, and you very often have this leg extended to this. So you are just stopped out with these patterns. So what is the proper context for that? I have discovered that this previous movement, this red movement, should be at least half of that movement. So if you stretch Fibonacci to measure that 50% from this to this, like that, so you can find that this leg is larger. You see that? Larger than 50% of the previous leg. Well, it is actually the same as 2 inversion. If you measure the inversion of this leg like this, yes, so your XA leg should be at least 2 inversion. No, it's not the same. Okay, no, it's not the same. Yes, because depending on the size of this leg, it can be smaller or larger. Okay, what is next? The next thing is this. It may go here, and the pattern will be looking like a consolidation pattern. It may go higher, then the pattern will be a kind of double bottom, a reversal for a downtrend, but it should be at least 50% retracement. If I draw the pattern once more, what is important in this pattern? Is this B point important? Not actually important. So if this is important, not actual. But what is important is the trade you execute your pattern. So suppose this is the 786 or whatever level you decided the pattern to work, and this is your stop loss. First of all, what is the stop loss? The strategy says that the pattern should go and reverse, and it shouldn't break this initial point. So the stop loss is the placement where you decide that it is not broken yet, but when it touches this, you decide it is broken. So simply set one ATR, it's enough, because the majority of traders think that if we have one candle body below that, then the level is broken. Not only the candle close, but one candle body. And ATR is the range between high and lows. It's not only a candle body, but it's a candle range. So it is pretty some kind of buffer that you have in case for some price action. Okay, so what you should look at is the price to enter somewhere in between your entry and stop loss. Yes, it will still be valid if it enters here, and you are waiting for the first bullish candle close. That's it. Let me mark that green, and let me make it this way. So the first bullish candle close is your entry, this way. Stretch your fibs and blah blah blah, and this is that. What it will give you, it will first give you a better risk to reward targets. Okay, it will first give you a better risk to reward, yes, compare this to this, even if you enter at market. If it doesn't give you a better risk to reward, then measure it this way. Your Fibonacci from stop loss to targets, and enable 50. Disable 32618, enable 50. Make it some color. Okay, 50%. If the price closes lower than 50, then this means that you have good risk to reward. Yes. If price goes and closes higher than 50, then that means that you'd better place a limit order somewhere at 50 or lower than 50 limit order. You already have the confirmation that the price is going to reverse and here. Okay, one more thing. When you have the price here like this, it is a good opportunity to enter, but when you have price exceeding your zone like this, then you should wait for another opportunity that it will happen here. For example, it should be here. You see that your 3-2 goes here, and now it is a valid opportunity like this. Okay, hope you understood how you can get involved. A more conservative way is not only to wait for one bull candle, but also this bull candle should have a higher close, higher than previous candle high. You see, it should have a close higher than previous candle high, and it doesn't matter if the previous candle is bull or green or red, it should have a higher close, a more conservative way. I've been testing them simply one bull candle after the pattern completed. Completed means that one bull candle appears within this zone, and if it exceeds, then the stop is placed at 50% level Fibonacci to have at least 1-to-1 risk reward. That's it. Let's go to the charts. What is this? Euro dollar, 1 hour time frame. I don't remember, maybe I have a 30-minute backtest on my template backtest, and let me find the first pattern. Maybe the first pattern is stop loss 107.82, 107.82.4, 107.82.4. Let's go to the first pattern, 107.82.4, 99, the first that completed. We didn't enter here. Maybe it was 30 minutes or 1 hour. 107. You see that price hit that level, but we didn't have the higher close within the entry. Was it a winner or a loss? It was a winner, so the first thing should be a winner. And was it a bearish or bullish? It was buying opportunity. 107.82.4. Okay, I think it is here. 107.82.7. Well, slightly, yeah, it may slightly deviate. 107.82.7. Let me close this. 80 to 7. Maybe I made a mistake typing something wrong, and now it will be recalculated a few decimals of a pip. Okay, so here are the results. Here's the accuracy of the patterns. 52%. Well, yes, it is not that good, and the average risk to reward is 1.6. But as I told you guys in the beginning, when you are looking at proper context, the pattern gives you larger targets. Look at the maximal favorable excursion. When price goes in your favor, it typically exceeds A. So you can see it goes higher and higher and higher. Not only 618 target, in this case, you can see it this way. And let me calculate it. Yes, so this is your entry. Not only 618 target, but also a retest of the high. Well, what is next? Let me briefly show you. More than A. 618. Yes, it happens when we just have 618. More than A, more than A, more than A, more than A. Whatever winner we have, I just marked the maximal favorable excursion. So how large it goes, the take profit. Then we have a number of losses. Then we have 0. What is that? 0, it just prevented a loss. So I also marked that it was prevented loss. More than A, 886, 618. So we only have 2 trades that actually hit 618. A, 786, 786, 618, 3 trades. So A, you can see that A, 618, 4 trades. A, 86, A, okay, 13, 886, A. So what this backtest says that with euro-dollar 30-minute patterns, it is pretty cool to have the 786 target, or at least you can use the 382 trailing stop. Yes, just measure this trailing stop like this. This would be your trailing stop. So when price hits 382, your stop loss is placed to where? To initial. When price goes high and higher and higher, you can see here's your stop loss at the bottom. It was not triggered. Oh, come on. And then it goes high and higher and higher, and then let's say your take profit was placed here and your stop loss placed here, so you had the choice of hitting the 618 or A. Well, that's it about euro-dollar. I am to rename it. How can I rename that file? Yes, save it. Rename that file. I need to rename that file. 30 minutes on euro-dollar instead of 1 hour. What's next? Let me show you some more backtesting spreadsheets. Let me close the MetaTrader. Okay, euro-dollar 1 hour. What is dollar Canadian? Here's the dollar Canadian. This is 1 hour. I remember dollar Canadian is 1 hour. It's not 30 minutes. It was the first one that I've been backtesting, and the accuracy of that is 63%, much higher than that. And you can also see 786 A, 886 A, 786 A, 786 A, 618 886 A, maximal favorable experience 786 786 A, 618 A. So it is pretty good to do the optimization of targets. You can shoot for extended targets using the proper context. Let me open some more Excel spreadsheets. Aussie dollar. This is not the best pair on earth. It is, look at this ugly movement, but the expectancy calculation says that it is slightly better. So if you continue that, it will finally recover your losses. Okay, 40% accuracy, not very good. What we have with excursion, whatever is a winner is 618, yes? Then we have 886, A. So A. You can see that instead of 618, we could aim at A. So 2 trades at 618A. If you will calculate that, A is 100%, yes? And you divide by 618, you will see that it is 1.618 larger. So if you have a winner being that, average winner is 1.61862, yes? So if you type it to multiplied 1.618, just let me make a winner, multiplied 1.618, yes? And you see the expectancy turns into 0.47. You can see it. Pretty cool. The expectancy of 0.47 is pretty cool. Although the expectancy of 0.07, well, it is almost break-even, but still it is positive. I think it's not 1 hour, Aussie is 30 minutes as well. I am to check that, because I just copied the name of those Excels and I didn't change them. I will check it. A bit later. Okay, what is next? The next euro dollar. Dollar yen is pretty interesting pair here. We have 50% accuracy with that pair and the expectancy of 0.25. But if we place the take profits at 618, yes, you can see that. But the maximum favorable excursion says that almost every time when we win A or 786. Very seldom it is 618. Price in the majority of cases, price goes higher and gives us larger targets. You see that? So only one trade is actually 618 here. So even if you have a stop loss on this trade, you see you have so many trades with extended targets. So just think about the trailing stop or whatever. The first position of course should be closed, because in majority of cases, if price doesn't start into your favor, it then ends up being a loss. So just do the break even of that, close in half. You can see that it is a winner of first target, but then it was turned into a loss. So if you don't do the break even looking for a higher target, you are most likely to hit a loss. You see, that's how many minuses we have. So they are actually zeros turned into minus. What else? Maybe some more pairs. No, I think they are all pairs that I have for now, the 4 pairs, but they are very different. Dollar Canadian, Euro dollar, Aussie dollar, and dollar yen, they are very different. They are not anyhow synchronized, and we don't have that kind of correlation as we may see with some other pairs. Let's say dollar, Euro dollar, and dollar Swissy. They are negatively correlated. That means they are mirroring each other. When one goes to the upside, another is going to the downside. And I have noticed then when I have a bull pattern on Euro dollar, I have the bear pattern, exactly the same but bear pattern on USD CHF. So when I trade both pairs, I am actually doubling my position, or I am doubling my risk. So you can see trading both of them, it's not very good. Make your portfolio as diversified as possible. So this is what I'm working at. One more time, let's go to MetaTrader, and I will show you the settings for the monster pattern search that I used in this kind of backtest. Let me open Euro dollar. Yes, by default it is opened as 30 minutes. So I suppose the only pattern, the only pair that was tested on 1 hour was actually dollar Canadian. and then I was simply opening other pairs, and by default they are open at 30-minute time frame. I think they are 30 minutes. I will check it and rename my Excel spreadsheets. Let's go to indicators. Let's go here, and you might see that the ATR is this. It's not new. The multiplier is the previous movement. As I told you, it should be more or equal to 50% of XA. So if I type 0.5, this means that. So it is 0.5 or more. So if I type let's say 1, it means that it is equals than XA or more than XA. And if I type let's say 0.786, it means that it is 786 of XA or more than XA, the prior movement, that the movement that I was talking about, that shows you the context of that. The algorithm is manual. I actually changed the algorithm to be very smooth, and now it is pretty good looking. What else? I disabled stop losses. Now you don't have any chance to change the stop loss because it is obvious that you don't need them. If you place your own stop, you just place it on your own, whatever you wish. But one ATR above the X or below the X will prove that the level is broken. The majority of traders share this idea. Okay, what is that? And custom pattern is added. You can set that to true, and you can set the settings. The minimum B of 50%, let's say, maximum B of 786. They were the settings that I've been using for the backtested pattern. That's why I call it unified. It is the combination of BAT and the Gartner pattern. Okay, that's it. Now let me demonstrate you the new algorithm I have right now. First of all, when you press A, it draws the pattern this way, from here to here. Nothing happens because the movement is very small. Let me draw it here, from here to here, like this. This is the pattern. And the second improvement that I have right now, it is triangle drawing. Instead of lines, you have triangle drawing. You can see X to A, whoa, triangle, to B, to C, whoa, triangle. You can see that. This pattern went without me, and it hit the targets already. Well, you have to do the backtest, and according to what type of trader you are, you may be using my ideas, maybe you're not using my ideas. Maybe you'll say, well, ideas are cool, let me also use them. It all depends. What about this pattern we have right now? Measure the XA leg, yes, and as I told you, the prior movement, like this, should be at least half of that. So the 50% of that XA, it is half, so the pattern fits this criteria. Well, that's it. An announcement for Monster Pattern Search customers, for Monster Pattern Search users. Once the backtest of that is over and the debug is finished, you will be notified about the update. So don't be mad about the fact that you don't have that version for now. Well, that's it for today. Hope you like the ideas that I found. Comment below if you have something to add. Until then, good luck and good trading. Hope to see you soon. And guys, Merry Christmas.